Hello again, everybody. Today is, I don't know what, we're in December already. Oh my goodness. I think it's like December 3rd, Tuesday, getting a little cold where I am. I don't know about you, but good to be with you again today. It's been a couple of weeks. I hope everybody had a little bit of refreshment. I know we don't have a dominant US audience here. We got people from all over the world, but I did enjoy the holiday weekend here in the United States and getting into the holiday spirit. So good to be with you all today. Gonna cover something that I'm calling Trade of the Year. And maybe you can make some guesses as to what you think the Trade of the Year might be. And then we'll get to it as we progress. But I want to start today a little bit differently. In part because today is Giving Tuesday and we are a 501c3 and not-for-profit, and we got some worthwhile things going on that if you have some means to support, we'd really love your support, and also just want you to see some of this because I think it's super cool. So I hope my video's coming through okay. It's a little bumpy on my end. I'm not sure why, but hopefully it's coming through okay on your end. All right, let me see here. Just gonna make an adjustment. Come on. Oh. Okay. Gonna get to this in just a second. Actually, I want to start here. So these are the archives of the Foundation for the Study of Cycles. And I'm going to show you a few highlights from the archives today, but I want you to see this just briefly. Many of these records go back 90 years now. And I've been going through the archives over the past couple of months and separating the wheat from the chaff. And my first impression of the archives goes back about 10 years when I first opened one of these file cabinet drawers and said, my gosh, this stuff looks amazing. I'm not sure exactly what I'm looking at, but I think this belongs in the Smithsonian. Meanwhile, it was not in the Smithsonian, and it's still not in the Smithsonian today, but I do hope we get it to the Smithsonian sometime in the not too distant future. So just briefly, I just wanted to share with you a few highlights. This is some of the original minutes from the original founding of the foundation. This is 1941, Greenwich, Connecticut. Here's one that caught my eye from 1943, the 1943 meeting at the Men's Faculty Club of Columbia University, where we had Copley Amory, the chairman, Ellsworth Huntington, member of the committee, head of geology at Yale University, established the board, Charles Greeley Abbott, who was the fifth secretary of the Smithsonian and was at the Smithsonian for nearly 80 years, was very interested in solar cycles. Sorry for all the jumping around and the sunlight, but just wanted to give you a little glimpse of this. One other thing. Let's see, where'd that one go? This one I think is very unique, kind of falling apart, but still pretty intact. And what this is the full proceedings of the Matamec Conference on Biological Cycles. Now let's see if I can block the sun over here. That looks good. So this is the conference that really inspired the Foundation for the Study of Cycles. Took place in Canada in 1932, and that's where Edward Dewey met Ellsworth Huntington from Yale University, and number of industrialists and scientists, and put together and had this proceedings. It's also where he started to connect economic cycles with biology cycles, geological cycles, wildlife cycles, etc. So just fascinating stuff. And we would love to really take care of this, get it preserved, get it digitized, and get it out and available to the public, and get the best pieces to the Smithsonian, where the 5th Secretary of the Smithsonian, 78-year Smithsonian institutionalist, was a key collaborator with Dewey back in the early 1940s. There's another file I found this week. Commodity prices in England from 1259 to 1932. The work of Raymond Wheeler. I think he was at a Midwest university, Indiana, Kansas, I'm not sure, studying climate cycles and their impact on social behavior. Just fascinating stuff. Long cycles. Thought this was interesting. Cycles of cold, droughts, and civil wars. Where are we today? 2050, 2020, somewhere around here. So the archives are full of this material. I want you to know that by supporting the foundation, it's more than just what we do on YouTube. It's really about restoring the history and pursuing what these economists, astronomers, geologists, wildlife biologists were pursuing, 90 and 80 to 90 years ago, and 4 decades, and made tremendous sacrifices and went against the grain of academia to do this stuff. And we're doing it again today. So wanted to share a little bit of that with you. And if you are able to help support the foundation by donations, here on Giving Tuesday, there'll be a opportunity to do so in the show notes. And we will do good things with it. All right. So moving on. Let's see. Anybody guess the trade of the year yet? I don't see it. All right, what do you think the trade of the year might be? Want to just review a few of our calls from the past month. This one I thought was important because it dates back to October 15th, when I said at the time, Bitcoin is ready for its next leg up. And in particular, I was looking at the 80-day cycle in Bitcoin here. We've had a good run from 67,000 to 100,000 nearly. But we're definitely at the top of this 80-day cycle. And we also have quite a bit of deterioration in the momentum and a CRSI momentum sell signal on the 80-day cycle of Bitcoin. So doesn't mean Bitcoin can't keep going up, but it does mean that, this trade has run its course. And again, it doesn't mean it's going down, but if you've got profits, it's a good time to take some and be on the alert for a correction in Bitcoin. We are in the, buy the rumor, sell the news period with regard to Bitcoin. On the other hand, just a little contemporary action that the 2-hour cycles in Bitcoin. Excuse me. In particular, this 236 period cycle in the 2-hour data has bottomed and is turning up. Along with, we used to track the 120 and it broke up into a couple of cycles. Now it's the strongest one is here at 106. But we've got some cycle strength on the shorter term time frame, meanwhile topping on the daily time frame. Last time we were together, we looked at gold and silver. That was November 19th. And here was gold on the 18th, and we looked at the daily cycles in gold. The weekly cycles were turning over, right? We had some seasonal bearishness into December. But the cycles on the daily data, number one cycle here, the 91, we're looking up, and we haven't had any major price movement here, but I think we've had some constructive activity to the upside in gold for sure. And then in silver, we took a little closer, more detailed look at multiple cycles. And again, nothing really exciting here, but constructive activity, I would say, into still some good tailwinds from the daily data on gold and silver. All right. No winner on the trade of the year. Well, I can tell you, it's not Bitcoin. It's not stocks. It's unleaded gasoline. So, going to get into why I'm calling this the trade of the year. But before we do that, we're going to go through our standard set of complementary views, 2 cycles, starting with the seasonals. Of course, seasonals are cycles. But we see here from seasonaltrader.com that gasoline tends to bottom in mid-December, next week, okay? And it starts a seasonal run that really doesn't have many parallels in the seasonals or the cycles world, okay? So out of December through February, as far forward as this chart goes, 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 11 weeks are bullish, starting in mid-December. Some of them super bullish, like the last 2 weeks of December and the first week of January. February, super bullish, 67% of the time, 67% of the time, etc. So seasonally, here's another view of the seasonality, the best months seasonally. All right, we only went to February, but March is even better. Look at this. December, January, February, March, April, and May. And maybe a little July, but even through into June and August aren't very bad. It's not until September, October, November that you get some bearish seasonality in gasoline. Right now, the commercials in the futures markets, the ones that produce and consume the gasoline, are not super bullish, okay? So they're not backing up the truck right now. they were back here. Okay. But they've been lightening up on their positions since. And then if we go to the small trader sentiment, compliments of Jake Bernstein, we can see that small traders are pretty neutral right now on gasoline. So not a lot of support one way or the other from sentiment. This is just gasoline price, just pure price over the last couple of years, last few years. And we can see that we are at a pretty darn substantial area of support right now, right here around $1.95. So this $1.95 to $2 range has held a number of times. So we're at a good area of support. Okay. And then finally, just looking at before we get to the cycles anyways, just looking at the last few years of this trade. We're just looking at when we had our first big green candle, okay, for what amounts to about a 6-month to 8-month trade. Okay, it was December 6th in 2021. It was December 12th in 2022, and it was December 12th in 2023. So this trade's coming up, okay? And let's now jump over and look at the cycles on this trade. So the cycle that I'm starting with here, okay, this is the weekly data on gasoline. The number one cycle, you can see it here on the spectrum right here, and it meets Lars's criteria that if you sat on it, it would hurt, right? More so than almost any cycle I've seen before, okay? And how long is it? 52 weeks. Okay, it's got the highest strength, clearly the best shape on the spectrum. The Bartels is not exactly where we'd like to see it, but not bad. And we can see on this weekly cycle, okay, that we're in the bottoming area for the gasoline 52-week futures cycle. And we can see it's done well. Top, let's see, bottom, 29th of November, 21. Top, 26 weeks later, May 30th. Bottom, 5th of December. Top, got a little right extension here into August. Bottom, December 4th. Top, a little early this time. Okay. Bottom, December 2nd. Maybe. Going to drill down now to the daily data. So here we are in the daily data, and no surprise, the number one cycle, 259 trading days. So just a few days more than 1 year. Okay, coming into the bottom here, bottoming around December 12th. Whoa. And zoom in a little bit here. Very constructive momentum action here. Let me turn on my Cursor Lux. Okay, so momentum has been moving up nicely. A very clear momentum buy signal earlier. Retesting of the lows right now. And I just wanted to show you something very cool. In fact, let's go here and look at the info box. So right now we're looking at 850 bars, right? So let's go back further in time. Let's see, go back to say 1600 bars. And what we want to see is if this cycle is holding up under more data. Whoa, 252 days. I think that's might be the exact number of trading days per year. Bar tells of 91.5 on, oh, I jumped the gun here. Did I do all of the, yep. I meant to kind of walk into this, but this is actually 6,000 bars of data, of daily data, going back to 2001. I was going to take that in steps and impress you how this cycle gets better and better the more data that you add, but still pretty remarkable. And if we highlight that on the chart here, right? I mean, this is back to 2001. Bottom, top, bottom. Yeah, didn't lose money. Bottom, made some good money. Bottom, made some good money, etc., etc., etc. Okay, all the way up to current times. All right, and here we are. I gotta turn this off. Let's try that again. I think this profitability score here is back to 2001. I'm not positive about that, but 84% profitability back to 2001. So hopefully now you can see why I'm calling this the trade of the year. And I know it's not the sexiest product on the market, right? It's just gasoline. But if you want to make money and you want to use cycles, this is the sexiest product on the market right now. It just doesn't get any better than this, okay? So look, December 12th has been the turning point the last couple of years. This cycle, you know, is bottoming right now. We've got the momentum moving up right now. But let's see, where do I have my trends? Here we go. I've got a new trend table, but it's the same idea as what I was using before, but it's 15 minutes, 30 minutes, 60 minutes, 2 hours, 4 hours, daily and weekly. So we really only care at this point about maybe this section here in the daily and weekly, a little bit maybe on the 2 hour, but we definitely have a lot of bearishness in the trends here in gasoline on the shorter term time frames especially, and we don't get into any bullishness in the trends until we get into the weekly data. Okay, this is RBOB gasoline futures. Okay, so the trends are clearly against us, and I know that I say over and over again that we use cycles and trends together in our trading, and I do. But this one might be the exception where the cycle really does override the trend. Meanwhile, we have to be careful. But the trends, I think I have another picture of the trends over here, right? My other trend score, definitely still moving down overall. But on the weekly time frame, we're getting some constructive trend activity. All right, so where does that leave us? So we know now that we've got as good a cycle as you're ever going to see. Happens to be 1 year long, got plenty of history, and the seasonality lines up perfectly, and it's game on. Meanwhile, price has been going down, right? Trends have been going down, but we are at some good support here. So now we want to go down and drill down into it a little bit more and look and see if we can't tune our entries here using some shorter term cycles. All right, these are still the daily cycles here. I've got the 258. This is on 1,050 bars. So, varies between 250 and 260. That's fine. Shorter term, though, there's this cycle here that's the number one cycle, and it's 53 days. Always interesting to me when you see the same number, like 52 weeks, 53 days, both being the number one cycle. I mean, I don't know exactly why that would happen, but it does seem to happen not infrequently. All right, so here we are looking at one of the bearish headwinds from the cycles world here, this 53-day cycle, okay, topping right now. We could shorten this up a little bit and try to make sure we're looking at the most. We don't need a ton of data for a 50-day cycle. 300 would be 6 iterations. Refresh. Yeah, we don't even really see that cycle anymore. 58. So overall, I don't think this is really a terrible threat to the bullish thesis for gasoline. We can also look at the cycle persistence here on the daily cycles. Here is this main cycle that we're talking about, 259 days right now. And if we look down here around like 53, not super inspiring, nothing like this annual cycle. So I don't think we need to worry about that shorter term daily cycle very much in gasoline. Let's look at some of the shorter term cycles. So if we go down and look at persistence again, okay. Here's the 4-hour data. We've got this 215 period cycle that was as long as 240. Has been tightening up, currently about 215. We've got pretty good cycle around 200, 185 on the 2-hour data, and 237 on the 1-hour data. So we'll take a look at those. So I'm on the 240 here. About 1,050 bars, and 4-hour data was mostly this bigger cycle here out around 220. Let me shorten this up just a little bit to 850 bars. And there you see it. $215 or $220. And then the number 2 cycle is this 89. So some caution from the 4-hour cycles, but still, this 4-hour cycle is nowhere near as strong as the daily cycle. But I do think it is something that we need to be paying attention to. And we've got also, a little constructive momentum here on the 4-hour chart and a little uptick in the cycle here. So maybe a caution, not sure. All right, now here's the 2-hour data. And we've got a pretty clear cycle here. It's 184. Bottoming with a strong momentum signal here. That looks pretty darn good. And if we were going to look at another cycle on here, is there anything else jumping out? You can go back and look at the persistence data. Nope. It's clearly the strongest cycle here on the 2-hour data. And then lastly, we can look at the 1-hour data. Very strong momentum, bouncing off of 190 here. And a pretty clear cycle here at 237. Looking good, right? So got some strong support from the shorter term cycles, the 1-hour and the 2-hour. The 4-hour is looks a little bearish, but it doesn't look as strong to me as the cycles that I'm seeing on the 1-hour and 2-hour. And we are in this trade of the year window. Okay. So I think that a good strategy over the next few weeks, if you want to wait for the all clear signal, wait for a weekly green candle. That has been the most reliable indicator in the past, but I think some accumulation over the next few weeks, especially as we move into mid-December, some dollar cost averaging into a position that might be, a 6 to 8 month position in your portfolio is a good strategy for ultimately getting into, a longer term position here. Yeah, last thing I just wanted to show you here. This is in RiskSmith. And so what we're looking at here is just this is just a collection of futures, Bitcoin, the US dollar, E-mini for equities, gold, gasoline. This UGA is the gasoline ETF, okay, and bonds. So just wanted to get a rough idea of gasoline here, that it's relatively uncorrelated to most other investments, minus 10% on bonds, 88% correlation to UGA between the futures and the, excuse me, let me make this a little bit smaller, trying to make it as big as possible for you to see. Come on. Well, I think this will work. 100% correlated to itself, of course. 16% to gold, 13% to stocks, uncorrelated to the US dollar, and uncorrelated to Bitcoin. So gasoline can also be very complementary in terms of, reduced discounts on your exposure to other elements in your portfolio. So it's got that going for it too. So I love this trade because the seasonality is there, the cycles are there, and it's uncorrelated to most other assets. In fact, if I just go over here, I think this is, what is this? This is 1-hour data. So let me go make this 1-day data. We'll let that recompute. All right. And then while I'm waiting for that, I'm just going to come over here and look at your questions, which I will get to in a minute. Chris, trade of the year better. Are you a Kerrygold fan, Chris McDonald? All right, we'll get to these in just a minute. I'm just doing this to get down to the correlation matrix here on daily data. Okay. And here we are. And gasoline is down here. Man, not sure what's going on with my computer, but you can see it's kind of correlated, positively correlated to stocks, although not to the Dow. Uncorrelated to bonds, ZT, ZF, ZN, ZB. Positively correlated to metals, uncorrelated to Bitcoin and Ethereum, and uncorrelated to natural gas, to the dollar, and other currencies. So, and even the positive correlations are fairly, in between 0 and 25%. So can be a good diversifier for your portfolio. All right, let me make some adjustments here. And see what's on your mind. Hope. Love the biological cycles. I work with them myself. There are patterns inherent in every aspect of our lives. Absolutely, Hope. And really would love to bring that forward more in the work of the foundation over the coming years. So we have to establish our income base right now to stay alive. And trading does that. But I do think when we start to see the connections between all the areas of cycles, it becomes even more important, not just for trading, but for our health, for our economy, for our society, etc. So all over it. Mark, Dr. Smith, here's a great book on cycles. The Key to Understanding Business Cycles by Michael Zohorchek. Yep, I've got it, Mark. And Michael Zohorchek, very interesting guy. I feel a lot of simpatico with him. So he worked with Wheeler, but he was also very much into behavioral finance and psychology, and did write, I think, the most accessible summary of Wheeler's work on cycles. So it's out of print, but it is very good, and I do recommend it. A Bitcoin silver overlay chart. Don't think I can do that on the fly today. Maybe remind me for next week. Trade of the year, butter. Yeah. Buy Kerrygold. How would you do gasoline in stocks? So UGA is the ETF for gasoline. Has about an 86% correlation with the futures, so no problem there. So a dollar cost averaging into a UGA position, that could be 2% to 4% even of your portfolio, I think is a good strategy there. Gasoline ETF, UGA, and DBE. Yep. I take it unleaded gasoline is materially different from natural gas and oil. Yes, it is. And it behaves differently for sure. All right. Quadruple bottom at this point. Yes, that's right. So very good technical support. If there is no rebound after multiple bottoms, I'd be a little cautious on expecting one without seeing something else. Not sure what else. Well, usually it's the first green candle of the in the month of December, right? And we may be getting that this week. That's what it looks like to me. I take that was the Kerrygold. That was one of my main inflation indicators, was the price of Kerrygold butter, because it used to be $3.99 for an 8-ounce block, and then it went up to like $4.99, and that was even too much for me. But now you can get it for $3.99 again, at least when it goes on sale. UGA is the correct holding. Yep. I believe UGA has a sizable portion of holdings that are more related to cash, about 45%. I'm not sure we will see the same cycles. Andrea, thank you for that. I do see an 86% correlation over the course of, a year. So, I trade the futures, but I think if that's not your cup of tea, UGA is a decent substitute. And you can go look at the cycles on it yourself. Chris, what emotions did you feel when you first felt the history of what you discovered years ago in those filing cabinets? Yeah, well, I did write a little note about that if you didn't get the newsletter over the weekend. But I think the main emotion I felt when I saw those archives was twofold. One was awe. I thought I was really looking at history here. But then it was in this odd place in Palm Springs in like this nondescript office building. And the environment around what seemed like a treasure to me did not reflect the same quality that the archives themselves reflected. So it was kind of troubling to me, and inspiring. So meanwhile, today, I am the caretaker of the archives. I've spent a lot of my own funds to get them safe and to take care of them, and now to go through them. And so I'm cautiously optimistic, but I would love to see them taken even better care of, and ultimately to make their way to some place that can preserve them for longer than I can do myself. So thanks for the question, Chris. Appreciate it. One last thing I want to just mention is, let me go over here. So I am going to be offering an investment course personally, not under the foundation, under my own drrichardsmith.com, where I'm going to be teaching my next week, December 11th, I'm going to be doing a webinar that's free, talking about what I've learned over the past couple of decades of my work and what I've been working on recently. So if you're interested, please, make sure you get on the wait list here at drrichardsmith.com under investment-courses. You can go here, investment courses, and we'll be sending out more information on that. And it'll be free next week. And then you can decide if you'd like to join my investment course that'll run January through March of next year. So would love to see some of you there. All right. Well, let's see, where are we? 12:43. Wow. All right. Time flies when you're having fun. I think we'll leave it there for this week, gang. Thank you for joining me. Thank you for your support for the Foundation for the Study of Cycles. If you are able to contribute on Giving Tuesday to help us preserve the archives, I'd love to get a dozen new filing cabinets, really good, that they cost about $500 a piece. And ultimately get some digitization technology to preserve them and continue to bring them to the attention of the powers that be and get them somewhere where they can have long-term protection. So thank you so much, everybody. Have a great week. Careful out there, and I'll see you again next week. Bye-bye.